afternoon. Good afternoon. What's up, everybody? Welcome to another daily digital download with me, your host, Dylan Grabowski. How the heck are you guys doing today? It is, hold on one moment. You know, sometimes I just need to record these locally because we run into issues sometimes. Anyways, welcome to the daily digital download on Friday, May 1st. We are live, baby, on X. We're live on YouTube. We're on both of the platforms. If I really wanted to, I could probably spend a little bit more money on getting onto more platforms, but I really don't know where else. Where else are we? Where else does CT live? I know that we're on YouTube. I know that we're on X. What else do we do? Where else are we? I don't know. Well, for those of you who are ardent listeners to the Daily Digital Download, you will have noticed that we are a bit delayed today. Usually I try to get these out by 1 p.m. EST, 11 a.m. Colorado time. But today, we were busy. I hosted a crypto coffee and blockchain beer space this morning on the hacks that happened in April. Today's May 1. So we covered all the hacks and the differences between the different types of hacks. There were 28 to 30 hacks last month, which is the most ever recorded in history. An alarming rate of hacks has been going on. But it wasn't the most amount stolen in a month. That goes to February of 2025 when Bybit was hacked for $1.25 billion. But of course, the culprits were the same. It was North Korea. So anyways, we hosted a crypto coffee and blockchain beer on the Smart Economy Podcast X page. And then I interviewed GSR co-founder and co-founder of the Yellow Network, Alexis Sirkia, today to talk about Yellow. And that was a great conversation. Look forward to sharing that podcast episode in 2.5 weeks. So, with all that said, I also had a Spanish lesson today. So you guys just get to know the whole reasons why I'm late. Anyways, thank you for tuning in to the Daily Digital Download on Friday afternoon, May 1st. It is beer o'clock in Europe. It is sleeping hours in Asia. And it's about to be bear o'clock on the East Coast here in the US. So for those of you who are watching live, this is for you. I see you. I see you. So we'll get through this quickly. Of course, I use these daily digital downloads to also build the weekly newsletter that we do at The Smart Economist, but I'll show you that in a bit. Let's just jump right into the news, why don't we? The Ethereum Foundation has sold Tom Lee's BitMine another tranche of ETH. EF sold BitMine 10K ETH, roughly valued at around $23 million. And this is the second time in a week that the Ethereum Foundation has sold a tranche of 10,000 ETH to BitMine. The price is down a little bit from a week ago. With approximately $47 million worth of ETH sold to BitMine in a week, the world's largest Ethereum-based digital asset treasury also began staking another 162,088 ETH as of Thursday. Absolutely maniacal. The company's staking exposure sits at around 70% of its total holdings, and they're bringing in hundreds of millions of dollars a year in passive income from ETH rewards. Super cool. Congratulations to Ethereum Foundation. They said that they will continue to use the funds to go towards core operations and activities, including protocol R&D, ecosystem development, community grant funding, and more. All right. Let's move on to some Polymarket news, eh? Polymarket has selected Chainalysis, a chain exploratory firm. They do diagnosis on hacks, and they just manage data, on-chain data, Chainalysis. And so Polymarket is using the data firm to police Polymarket insider trading on, quote, all types of fraud and market manipulation, end quote, as the prediction market itself seeks to raise $400 million and gain approval to relaunch in the US. That is a hefty amount of sum that they're trying to raise. Polymarket said, quote, this sends a clear signal. Insider trading, in addition to all types of fraud and market manipulation, is not welcome on Polymarket, and those who attempt it will be identified. Investigative tools to produce blockchain-verified evidence for proactive and reactive engagement with law enforcement and regulatory inquiries will also be leveraged as a part of this relationship. In addition to Polymarket using Chainalysis to police itself internally, and I have to do this, the U.S. Senate has unanimously voted to ban themselves from prediction market trading amid insiders' concerns. U.S. senators are now barred from trading on prediction markets following a unanimous passage of the resolution yesterday. Senate Resolution 708 makes it effective immediately that senators cannot trade on insider information on Polymarket. I love seeing that this is happening. Congratulations, kudos. Here, let's do this again. Way to go, Senate. You finally passed a law that makes it so you can't use your insider information against us. Now do one for stocks. Now do this for equities. Now do this for insider trading on stock markets. I mean, yeah, cool. Senate removes themselves from prediction markets, but what's the average age of Senate? How many of these senators are actually using prediction markets? And there's only 100 of them. Anyways, we'll take what we can get. Kalshi has also taken steps to weed out insider trading and publicly disclosed cases over the past couple months. Last week, they opened 3 insider cases involving candidates, which we covered on the Daily Digital Download, about candidates betting on the outcome of their races. And as we just said, Polymarket has tapped Chainalysis to do internal policing. So the the prediction markets are starting to, they're trying to raise money, and so they're doing anything they can to make themselves look good. To raise $400 million like Polymarket is, of course you're going to hire the world's leading on-chain data analytics firm to help you police internally. Don't get me wrong. This is good. We want to see markets correcting themselves. We want to see exchanges, prediction markets, DeFi platforms. We want to see the industry policing itself internally, because if we don't, then they will. They being the government. And government policing is never clean. It's never going to get to the root of the problem, and it's always uglier than what we really want. This bill was put forth by Republican of Ohio, Senator Bernie Moreno. And I'll give props to him for saying this. Serving in Congress is an honor, not a side hustle. Americans deserve to know that their leaders are here for the right reason. Yeah, I don't want the people that I elect going into office and making millions of dollars off of me, because I put them into that power, into that position, and then they gained access to insider information and were able to make money off of it. Of course I don't want that. Anyways, how do I want to do this? Let's do good, bad, good. All right. The next piece of news I wanted to highlight is 99.2% of Omnichain Tether, USDT0, is backed, or stable. 99.2% of USDT0 users and holders have less than $1,000 in USDT0, which is significant because the overwhelming majority of people using USDT0 are using it because they need it, which I think is super freaking rad. As I've spoken about extensively, I released an article in January of this year, at the very beginning of January, about the killer products and killer use cases that we saw in crypto in 2025. Stablecoins was number one. Stablecoins have actually been the killer use case for years now, probably dating back to 2020. They're more rampantly used than Bitcoin, than Ethereum. They're used for more day-to-day processes by more non-crypto natives than any other blockchain-enabled tool, feature, or dApp that we have out there. Why USDT0 is interesting is because it's an omni-chain solution. So if you're a smaller blockchain and launching and you want to have Tether on there, it costs millions of dollars to onboard Tether. It costs lots of time, and you have to have on-chain metrics that Tether appreciates. You have to have users and volume and TVL. And if you're a fledgling chain or a 10-year-old chain who wasn't able to attract much users, you can't necessarily get Tether because it's expensive and they don't want you. The best way to bridge from being at position point A to position point B, which is getting Tether on chain, now is to onboard USDT0. USDT0 is an omni-chain token backed one-to-one by Tether stablecoin. According to data share with the block, 99.2% of all USDT0 holders have less than $1,000 in their wallet, which, as I said earlier, is important because stablecoins represent the most widely adopted category in crypto and one of the few use cases that appears to have found PMF, product market fit, for everyday users. If you talk about folks in Buenos Aires, if you talk about folks in Turkey, these are people who are experiencing or were experiencing massive inflation of their local currency, and they wanted to escape that. And the best way they could escape that was by allocating into the dollar. In some countries, it's not easy to swap your local currency for the dollar. So the next best thing was off-ramping onto Tether, using a local exchange, using local swaps to convert your local currency into Tether. And the quiet part out loud is the majority of these Tether holders were being held on Tron. Of course, His Excellency Justin Sun is embroiled with the Trump family right now over the World Liberty Finance platform, but that's a topic for another time. The USDT0 team wrote in a report, quote, USDT's active user demographics show that the strongest engagement has come from modest, everyday holders making retail scale transactions rather than whales moving large balances. This challenges the crypto industry's growing institutional bias without undermining institutional opportunities to participate in this growing ecosystem, end quote. I love USDT0 because it's solving the first mile, last mile problem, which I mentioned earlier. How do you get a new chain and Tether on the new chain? If you can't pay Tether the money to onboard Tether onto your chain, if your chain isn't ready for it, then there's still stable coins that your users of your chain can gain access to. USDT0. According to the report, though, users appear to use the omni-chain version of Tether primarily for DeFi, with perps DEX and derivatives chain trading representing the strongest category growth in recent months. Derivative volume using USDT0 hit $80 million in April. The asset is also used to move capital between networks. Again, here small traders make up the majority of the USDT0 activity, although large holders dominate the total volume. So, really cool. Take a peek into USDT0. Look at what they're doing. Look at the market gap that they're bridging. And I would love to hear from you. Do you think USDT0 is a cool product? Tell me. All right, let's go back into security season. I spoke about this at length today on the Smarty. In fact, here, let's just do this real quick. Head over to the Smart Economy Podcast at Smart Economy Pod and just take a peek at what I spoke about today. It was a 45-minute talk. about all of the hacks that happened in April of this year. And thank God it's Friday, May 1st, because April's over. We can finally be over all these hacks. But April registered more than 20 hacks, closer to 28 or 30. The largest amount in history. It was the most hacked month in crypto history by the number of incidents. The total dollar amount of stolen funds was not record-breaking, but more than 20, closer to 28 or 30, was record-breaking. The number of incidents tells one story, but the method tells another. Drift and Kelp weren't code bugs. They were months of social engineering against humans with admin keys. This is the biggest theme that arose from the attacks in April. Well, there were two themes. The first, North Korea. So far this year, North Korea is responsible for 76% of all of the stolen funds that have been hacked. Isn't that insane? But the other story is the overwhelming majority of hacks that happened in April were not smart contract hacks. They weren't hacks into DeFi contracts and bugs on chain. It was the infrastructure that surrounds the blockchains that we use. It was the infrastructure surrounding the bridges that we use. It was the infrastructure surrounding the dApps and products that we use. And so that is what is really scary, is that audits, smart contract audits aren't enough anymore. And I'm old enough to remember back in my day when a new project was launching, all we cared about was the audits. Show me the smart contract audits. Who audited them? Was it Red4Sec? Was it PeckShield? Who did the audit? How good is the auditing company? Well, the scary part is today it doesn't matter, honestly. And so I would advise anybody who's interested in this subject. I know I'm tooting my own horn here and selling my own book, but please go listen to this episode that I did today. You can also see on my feed, where are we? Right here. I spoke about the 5 different categories of hacks, how responsible North Korea is, exposures that you and I have, how to identify them, what you can do about it, and also AI's role. Because more and more speculation is going toward the fact that AI is not only making more hacks possible, but it's possibly enhancing the ability of these hacks. But let's not continue to bang the table and drum and beat our drums about how bad April was and how negative and sad and scary our industry is, because we also had a positive response from the broader DeFi industry. Dozens of projects, people, and companies came together to donate to DeFi United, which was the solution to backfill the RSETH, the unpegged RSETH. 116,500 RSETH was stolen, meaning that 116,500 ETH was traded off of Aave using the paper-backed RSETH that had nothing backing it because of the Kelp DAO hack. So the industry came together and donated ETH so that RSETH could maintain its backing and so that we could start to heal the contagion of the bad debt. And so Arbitrum caught a lot of flack because their security council voted 9 out of 12 votes to freeze 30,766 ETH that was impacted by the hack on Arbitrum. And now a lot of people were clamoring that this means Arbitrum isn't a decentralized product. You can randomly get your wallets frozen or your assets stolen off of them. And while these arguments might hold weight in a court of beer drinkers at a bar who are just philosophizing about random scenarios, in this instance, 30,766 ETH were stolen. And so the Arbitrum Council, Security Council, voted and acted to freeze that. And so we can philosophize all we want about how decentralized Arbitrum is or isn't, but at the end of the day, they stopped tens of millions of dollars from being stolen. And so now the process to vote on unfreezing these ETH and sending them to DeFi United has begun. In the first hour of voting, 16.9 million ARB tokens were put towards a yes vote for unfreezing this ETH and sending it to DeFi United. And at the time of the writing of this article, which was at 4:58 p.m. Eastern Time, New York time yesterday, there was not a single no vote. Now, this has been 24 hours since this article was written, so perhaps there is a no vote. Go check for yourself if you're really interested. But that being said, the process for governance has begun. The vote is running until May 7th. It could take up to 38 days for all of the funds to finally hit DeFi United, depending on how slow the vote is. I'm pulling that number out from previous coverage on DDD Wednesday, DDD April 29th. So go take a peek at that episode if you're interested. And so, cool. Yeah. Congratulations to Arbitrum DAO. Congratulations to the industry for DeFi United. I think we were able to not quite make lemonade out of a lemon, but we were able to provide answers to doubters about DeFi. One could say that we were not a serious industry 2 weeks ago because some random obscure platform called Kelp DAO had 100,000 plus ETH as the back of its RSETH token, which I guarantee 90% of people had no idea about until the hack. And the contagion was gnarly. And because of that, Wall Street, traditional financial institutions, banks looked at DeFi and said, this is not a serious place. We can't take this investment vehicle, I guess, this investment vertical, this economic vertical seriously. But as I also covered earlier this week, there were folks out there working in TradFi who pointed to the solution that DeFi United gave and said that DeFi didn't break, it bent. So I'll take it. On to our second to last piece of news. Riot, a Bitcoin mining company that is pivoting to providing AI compute, has reported its first $33 million in data center revenue. When I was hosting the first round of daily digital downloads in February of this year, a lot of the news, I was doing these for about 3 weeks, and then ETH Denver and ETH Boulder hit, and then I fell down the OpenClaw rabbit hole. And for about 2 months, for about a month and a half, I wasn't doing the daily digital downloads because all I could think about was OpenClaw. It was like, it was ruining my sleep, actually. But I've since regulated myself and found balance. I'm one with the universe and with the agents. I still have to fix them every day, looking for another solution. But anyways, when I was doing a lot of these daily digital downloads in February of this year, this was a story every single day that I was covering about a Bitcoin mining operation that was converting its services to providing AI compute. Because you can use the GPUs that were for mining Bitcoin to run inference and compute for AI models. And Riot was one of the big names that was pivoting. And so they've posted their first $33.2 million in data center revenue, a major milestone for the company as it diversifies beyond Bitcoin mining, leaning more heavily into serving AI data center and hyperscaler customers. For Q1 this year, Riot posted $167.2 million for the quarter, and $111.9 million came from its core Bitcoin mining business, which has been declining year over year. So the new data revenue segment accounted for roughly 20% of its total revenue, which was largely driven by Riot's long-term lease agreement with AMD. So I guess cool. It's in the long term, it's worrying to see Bitcoin miners pivoting to providing AI compute. But, we also persist in markets, and free markets are going to do free market things. And this was a company that wants to stay alive and stay in business and pivoted to AI. Now, the majority of its revenue came from Bitcoin mining operations. Riot itself still holds $1 billion+ in Bitcoin, and they're still doing Bitcoin mining. So hopefully we can see the market turn around and we don't lose all of our Bitcoin mining to companies that want to pivot to AI compute, inference, provision, infrastructure. Because over the long haul, Bitcoin security budget is something that will be of concern as we see less and less miners. It costs less and less to attack the Bitcoin network. And if the Bitcoin network is ever attacked on a 51%, using a 51% attack, I think that might be it for crypto and blockchain in general. So we never want to stop rooting for Bitcoin to be safe, to thrive, and to succeed. And then lastly, speaking of AI, let's just end on AI agents. MoonPay has launched its stablecoin debit card for AI agents on Mastercard network. Mastercard recently released its agentic payment solutions over the past month or so, and it's cool to see crypto payments company MoonPay launching its stablecoin debit card for both agents and users, people, which allows all of us, to spend on chain. The product is called Moon Agents Card, and it's a virtual Mastercard debit card that converts stablecoins into a fiat at the point of payment. It can be used at any online merchant globally that accepts Mastercard. The CEO and founder of MoonPay, Ivan Soto-Wright, said agents are already managing wallets, executing trades, and moving value on chain. The one thing they couldn't do was spend at a merchant. Now they can. And so as we start to see AI agents becoming more advanced, they're to be expected to do more things on our behalf, including paying financial transactions. I hate paying my credit card bill. What if my agent just paid it for me? That's the world that we're kind of entering into. And last month, Binance founder CZ said AI agents will make 1 million times more payments than humans, and they will use crypto. So if this is indeed the world we're going to, then expect to see more news like payments providers providing opportunities for both agents and humans alike to conduct spending. And with all that said, folks, happy Friday. We made it. If you haven't yet, please subscribe to my newsletter, thesmarteconomist.beehive.com, where we bring you nothing but value. Signal. I'm really honing these newsletters to provide the signal that your favorite thought leaders in the blockchain and crypto space don't provide. I compare what we spoke about throughout the week on the Daily Digital Downloads with what was spoken about on some of my favorite podcasts that I use to solidify my views in the space. And hopefully this newsletter fills in the gaps of what the most pertinent, intelligent thought leaders aren't talking about in the blockchain and cryptocurrency space. So, folks, with all that said, thank you so much for tuning in to the Daily Digital Download for Friday, May 1st. I appreciate you. I appreciate the time you spent here. And I hope you have a safe, fun, and happy weekend. Go touch grass. Go hang out with friends and family. Go do the things that you love. And until next week,